Welcome to TradeTheNBA.com. This is Jonas Reports for the 19th of June. And kind of this is why we follow the shakeout. We can see that we had come up to this peak. We were starting to meet with our magenta and cyan right at this particular point on the turnaround aspects. And we had noticed the histogram started to rise. We've had a growing strength in our DOC. And we were waiting for that secondary pivot, which obviously occurred yesterday. And the early precursor was the previous day's beginning turnaround from a new shakeout standpoint. And boom, that forced the short covering that we had nice level of shorts in there. And boom, that's exactly what happened to them. And they're the ones that drove price nicely. And so just gets us just outside that zone. The question will be is how far we carry through with this. NASDAQ is poised for a decent run on that. It had a beautiful with the orange dip below. Don't quite see that on the S&P yet. But all things being equal, they're right in line. Now, oftentimes, though, you get this blowout that's just before a bigger downturn. So we're certainly going to be keeping an eye out for those signals as well. But like I was pointing out, you can have bull runs within broader shorts, and then you can see that sometimes those bull runs will then actually literally turn into an actual run itself. In this case, we had been looking for the euro to fill back in the positive extremes from here and here. Still has a little bit further to go. Of course, the ECB talking about potential of dovishness and maybe needing to ease further, which you're already looking at negative yields in a lot of different countries anyway. So that's not good news for them, and that's just why the euro. I mean, the fact that it's even this high is simply because of U.S. intervention. Helps maintain U.S. exports. So oil taking a nice little bounce off of the pretty much extreme oversold. We had seen the dip below the orange here, then rising DOC red, and of course the dip of the orange right as you're getting to the 13.5. Usually a good indicator. And this has the potential with the crossover of yellow over the magenta here and still being below the negative 13.5. Those can have decent runs, so that would be interesting to see if we can get oil to have a significant run. The expectation is that you would at least get to the 50% if you get past the 23. You can enlarge this a little bit, make it easier. So we'll begin to see whether or not we're going to have any continued strength. There's still a long ways to go. Every time we're getting a meeting between green and the cyan here, the cyan is always moving ahead, meaning that shorts have overwhelming strength at this particular point over, and the fact that you don't have a steel reset to below is a factor, but when it moves above 13.5, well, that can create bullish little stints. The same thing happened right here when we attempted the last move to the 23 was because the steel was above that 13.5. Worth looking at when you see those. And of course, gold is maintaining its run. I mean, that's been a huge move with the magenta over, well, plus 15. Now we're at the magenta almost above 25. That's just staggering strength right there. And came back and supported right off the beam yellow and popped right off of it. And again, this is one of those where I keep repeating it, cyan under red. It's always buy. You knew that you might catch a little weakness when you get the little breakdown, but when you're that far above zero with the red DOC, we don't tend to worry about it. Not a factor. So intraday, we had talked about this nice buy signal that came in at the early part of it, and from that point, pretty much nothing to do but just let it go. We started to get a couple of DOC spreads that came in up towards the peak when we were right about here, but when you had that full reset of steel all the way this low, it's just going to be a matter of a couple of bars before you're going to get that turnaround uptick, and as soon as that happens, you're going to rise. What became more interesting was matching, well, actually slightly higher highs, much lower shakeout reading. That one became interesting to me from a short standpoint, and sure enough, that's the one that led to, we also had rising lows of the Morganacci, and we know when those rising lows, usually you're going to get a meeting point between price and the 0%. Usually it's a race between which one comes first, how fast the zero rises or how quickly price declines. But needless to say, sure enough, they met and satisfied that requirement right there. We ended up with some of these soft buys simply because, and the reason I say they're soft buys, you didn't get the steel coming from underneath and back above the red. It started back over here. This was a question point whether or not you were going to get some bullishness out of it. But again, green was unable to take over cyan, and that pretty much makes it clear. So we went into kind of just a trading range across the zero, and every time that you had these nice little spider meetings and a rejection, it's like, okay, the shorts are going to be strong here. Then it's just a matter of as soon as the cyan, the steel right here crosses below the cyan, that's kind of the trigger point, and sure enough, and you can see it kind of clearly. So the setup is right there that the weakness has been established. It's a little early because you still have rising red in that. But coming across, you're just waiting for that steel to come down and cross right below that cyan. It gets very close right there, and then boom, triggers it right here at the 27, and then you end up, dipping all the way to the lows down to 21. And that's just the easiest way to visually see it. And this happens over and over and over again in that relationship. You're getting your early warnings and then the follow through. Currently in the pre-market right now, we're still just kind of flat to that. There's still a bunch of positive extremes, so keep that one in mind. Even going all the way back to, the beginning of the breakout even. So literally all the way back down to the 28.97 range. Oftentimes when you get this break into the 29 or any other zero number, usually around the 23 to 26 range, tends to be resistance. If you can get past that up into the 35s or whatever, it usually is enough momentum to it to take it to the midpoint, which at 29.50 we would be getting pretty close to pushing towards breaking 3,000, which I know is just shocking to some people, but there's just no reason to be shocked over it. It's well within the expectations of post-war breakouts, and this is well documented. So people just find it to be inconceivable given this, that, and the other problem. But the market's pricing in value future and the potential of inflation, and that automatically forces the market to trade higher, despite whether or not the earnings and things like that justify it, because the devaluation is not something that the market takes kindly to. So that's the long and the short of it. As always, if anything unique is happening, I will certainly be putting it up. Trade well. We'll talk again later.